Hello everyone, welcome back to Upside Down Data. Today I want to talk about whether or not we can believe this little mini Bitcoin rally that we just experienced. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. Alright, so if you were watching the markets today, you probably noticed that Bitcoin had a good day. We had about an 11%, a little bit over 11% move to the upside today, which was kind of unexpected in the context of the recent months, right? You know, every time Bitcoin's been putting in a double-digit percentage move, it's been to the downside more recently. We haven't seen one of these big green days in quite a while. So a lot of people are excited, but also I think a question a lot of us are asking is, okay, that's a good start, but can we believe this rally, right? Is this something that's likely to turn into something more major, something that's actually going to bring us into higher prices, or is it going to fizzle out and just get sold off and we'll just go back down into the range we were just playing in at around 30K, or do we even have to go lower than that? I think that's the question we all are asking. Can we believe this rally, or is this just another bump in the road down? So I want to look at a number of different data sources and indicators to try to get a better sense of where we might be in the market. So what I'm showing you here first is the momentum bias indicator for Bitcoin. I actually just showed you this recently, but I thought it was relevant to talk about it again, given what we just saw with Bitcoin. So what this indicator does is it captures the bias of momentum in the market. And what I mean by that is there an overall positive bias of momentum where essentially the upside bias is just overwhelming and drags price up with it? Or is there a negative momentum bias where the downside momentum is so strong that any attempts to recover to the upside just get immediately rejected and momentum pulls price downwards? So this is denominated as a z-score. So 0 is the average momentum, and with Bitcoin the average momentum is positive. Look at this growth over time. This yellow line here is the price of Bitcoin in log form. And then this is standard deviations are these levels here. So one standard deviation above the mean, for example, and then one standard deviation below the mean down here. So one of the things that I mentioned recently with the momentum bias indicator is that we are pretty extremely negative right now, right? That the momentum bias is pretty extreme to the downside. There are really only a handful of times in Bitcoin's history when it's gotten to this extended of a level to the downside in its momentum bias. And one of the things that I mentioned is that previously was that I was looking for a reversal to the upside on this indicator, right? One of the things that we really need to see to get a convincing rally out of our current levels is for the momentum bias to move back up and break, hopefully eventually 0, and then not just immediately get rejected back down below. We'd like to see it come up, like what we did in the summer, come up above, and then maybe we start doing this kind of oscillation around 0 again as we move up. But this kind of convincing move to the upside is one of the things I'm looking for. And it's a little hard to see here, but we actually did put in a reversal right now to the upside on the momentum bias indicator. Now, that doesn't mean that we're out of the woods from this perspective by any means yet, right? We still need to we still need to make it a long way back up to get to 0 to reclaim that kind of average momentum bias that Bitcoin tends to experience. But that's certainly hopeful, right? You'd certainly like to see momentum being able to re-enter the market and see this nice reversal point. So I'm going to be watching to see if we can kind of break past some of these earlier levels that we were at down here, and then certainly look and see what happens as we might or might not approach 0. If we do approach 0, I'd like to see it to be able to clear it convincingly before any kind of reversal. I wouldn't like to see it getting rejected off of 0, because that's what you see in bearish conditions. You see it every time it tries to poke its head above 0, it just gets immediately dumped back down and kind of just drags price down. So one of the things I'm going to be watching for, see if the momentum bias can reclaim these more neutral levels around this average momentum bias. So that's one data point that we can look at. That's certainly hopeful. Another thing that we can look at is just our risk indicator. So our upside downside potential indicator, which identifies high and low risk times in Bitcoin's history. And you can see that here. So this is the Bitcoin price, color coded based on risk level. And one of the things we've been mentioning is that from the long-term UDPI's perspectives, this is one that cares about moves that play out over months to years, so the long-term perspective, it's sitting quite well in the green zone. I'll show you the raw output in a minute so you can see the more exact value, but it's right a little bit above -3 right now, right here. So it's a little bit higher than it was during the summer. And so certainly from that perspective, I don't think it's unreasonable to think that this could be a staging area for a move to the upside, right? We've seen this before, that when the UDPI gets down to these low levels down here, that's a plausible bottoming point for, at least in a local sense, before being able to put some moves back into the upside. Now, of course, it's not guaranteed that that's going to happen. The model still thinks there's realistic downside potential, but certainly it wouldn't be shocking if this was the base of a move to the upside, right? If this local bottom we had in the low 30Ks, if that acts as kind of that bottoming point to move back up, risk had reset a lot. There's a ton of realistic upside potential relative to downside potential. So it wouldn't be shocking if this served as a base. Now, again, it doesn't have to. It doesn't mean the rally will continue, but this is the kind of setup you look for. It's a lot more plausible to me that this could serve as the bottom than even something like what we're up at here, like around 2, for example. Or certainly you wouldn't expect a big rally off of these really high risk zones that we've seen in the past. So this is certainly a very plausible thing, not entirely dissimilar from what we saw in the summer. So this is the raw output of the model across time. And as I was mentioning, you can see that we're down at a similar risk level to where we were in the summer. A little bit higher, but not super much higher. So a pretty reasonable reset point, potentially. And one thing I think is really interesting to see about the UDPI behavior all the way since this big final dump at the end of 2018 that kind of marked the beginning of this whole market cycle that we're in right now, is you can see this kind of sequence of higher lows that have been happening. Every time we've seen a substantial correction, so be that the March 2020 correction / crash, be that the summer crash, and then this more recent crash or correction, however you want to define it, you'll see that every single time we're actually finding a higher bottoming out point so far, assuming that this is the bottom here. Now, who knows? If Bitcoin's price dumps, then this could just break down to the downside. We'll see. But if this continues, if this reversal holds and we start moving back up and realizing some of this upside potential, I think it's just quite interesting from a more of a market cycle perspective that this is something we actually do see in bull markets in the past. We can go back and look at the first kind of run after the first kind of initial market cycle here. We can see that as we came down in the first kind of bear market or big correction, we then put in a higher low, around about the same kind of level here. We didn't break below, and then up, put in a higher low here, and then finally the market cycle top into a bear market. And then again, we kind of had these similar bottoms, slightly higher here than here, and then putting in kind of these higher lows until we broke off into the parabolic run. And then again here, these kind of macro higher lows, and then who knows? Potentially, we could start seeing some upside. But again, not to say that's guaranteed at all. Just an interesting similarity to past market cycles where you'll see those higher lows on risk being put in. And the way you can interpret that from the UDPI's perspective is just that every single time Bitcoin starts realizing its realistic downside potential in these times, if you're in these kind of bull markets, it won't realize as much downside potential as it could every single time. It's kind of finding support earlier and earlier, which might be consistent with a bull market kind of idea. It's similar to the idea of putting in higher lows when you're in a bull market, that every single time you get a correction, you'd like to see the low be higher than the previous low, because that suggests that you're finding support at higher and higher levels. That's a strong market structure to keep moving up. If you start seeing lower lows from previous macro lows, that's concerning. That's oftentimes what happens in bear markets. So potentially a sort of similar interpretation with the UDPI I just thought was interesting to point out here. Now again, I don't think this is diagnostic yet that we have to be going in a massive rally here, but I think it's certainly hopeful, right? The fact that we've been able to find this bottoming point in risk is something we'd like to see just from a historical perspective. All right, so there are a couple other things I wanted to talk about also, some other data sources. So one thing that we don't talk a whole lot about on this channel, but I want to just point out here, is just looking at liquidations in the derivatives markets. So of course with derivatives markets, the idea being that people are betting on price going up or down. So when you're betting on the price going up, that you're putting in a long bet, you're putting in a long position. If you're betting on the price going down, then you would short the market. You put in a short position. And one of the things that can happen with derivatives is that if the price moves too far against people in whichever way they're betting, they can get liquidated, or their position can be forcibly closed, and their collateral can be sold off, or their position is just instantly sold. And what that can do is it can create buying or selling pressure depending on which side is being liquidated. If longs are being liquidated, that creates selling pressure, which oftentimes will drive the price down. And if shorts are being liquidated, then that can create buying pressure, which can drive the price up. And one of the things that might have been acting in this recent, 11% move to the upside Bitcoin just did is potentially some bit of a short squeeze, some shorts getting liquidated. And it does seem like that, at least to a degree, did happen today. Significantly more shorts were getting liquidated today than longs. And just for reference, this data is coming from CoinGlass that I'm looking at here. And so this is not anything super spectacular, right? It's not like this is some incredibly massive short squeeze that we just saw today, but it was certainly part of it. And one of the things that'll be interesting to watch is how this plays out over the next few days. If the price of Bitcoin is able to keep on going up in price, then maybe some additional shorts will get liquidated that might be able to push the price up even higher. I think in the summer, part of the reason why we got that explosive move out of the summer was a big short squeeze. And it didn't happen all in one day. It was across several days that we just got these liquidations of shorts that really push things up. And it also depends if new shorts enter the market, kind of disbelieving this rally, trying to short it, thinking that it's just going to go back down again, then sometimes those will also get liquidated, which can push price up even more. So just something to keep an eye on. And I think another thing that's relevant to this discussion then is, whether or not people are likely to believe this rally and what that could mean for things like, what side people are betting on the derivatives market or things like that. And one thing that I think is just a useful data point, not entirely diagnostic, but a useful thing to look at is the fear and greed index for Bitcoin. And so that's just what we're looking at over here. This is look into blockchain is where I'm getting this data. And so this is just the price of Bitcoin color-coded based on the fear and greed index. So green or higher levels are greedy conditions in the market, and then these these red positions, orange to red, are the fearful side. What you can see is that we've been in pretty extreme fear for a long time, or pretty deep fear for quite a long time, all the way through this correction. And so, being in extreme fear in and of itself isn't diagnostic of a reversal necessarily. But when you get to these points of extreme fear, oftentimes that will mark potential reversal points. So this is just another perspective that this would be a reasonable thing to see a rally from here. Wouldn't necessarily have to be a rally that takes us back to all-time highs by any means. Talk more about that in a minute. But at least some kind of relief rally is not unrealistic given this level of fear, I would say. And also, just to the degree that this is really capturing fear in the market, one of those things is that if the market is generally fearful, there might still be people who are doubting the moves. And so, for example, in the derivatives markets, those people might be betting short and then get liquidated, which can create buying pressure. Just one thing to keep in mind. Really, the more fearful the market is, kind of the more bullish in some ways I become in terms of its capacity to be able to start recovering. Because when the market's really greedy, that's when people are likely to just continue piling in on the long position and then get liquidated and create selling pressure to the downside. And in the current market conditions where demand is not especially high, we don't really have a huge amount of retail demand right now, derivatives markets do play an outsized role in driving price action. So just something to keep an eye on. Not saying it's the only thing to pay attention to, but just something that is interesting and more short term to pay attention to, of how people are potentially navigating the derivatives markets. If you're seeing a lot of longs or shorts entering, and which side is getting liquidated and how it's affecting the price. Just something to keep an eye on. So certainly the more fearful the market is, kind of the more hopeful the more fearful it remains throughout this rally, the more hopeful I'll become. You'll see that we stayed in fear during this rally out of the summer, well into the rally before flipping more greedy. I'd like to see something similar to that to think that this could be a more sustained move to the upside. I'd like to see sentiment stay bearish for a while to really make sure that people aren't just, longing this prematurely and then getting liquidated and then dumping price back down or something like that. Just some things to keep an eye on, in my opinion. And then one other metric I did just want to mention I think is relevant. This is a little bit less short term. I see the derivatives and fear and greed index being a little bit more short term in their information than some of the other sources. This reserve risk is an indicator that I haven't seen a whole lot of people talking too much about recently, but I think it's been doing some interesting things, so I want to talk about it here. So reserve risk, if you're not familiar with this indicator, it's a little bit complicated how it's computed, but essentially what it's looking at is long-term holder sentiment. Essentially what you can look at this oscillator as saying is that when it's in these high zones, these red zones, that's suggesting low confidence by long-term holders. They don't think the price is going to be able to appreciate much more. They're taking that as a good opportunity to exit the market, to sell or distribute their coins, because they're not very confident in it being able to keep on appreciating in price, at least in the kind of midterm. You know, they expect some kind of a correction, essentially. Same thing we saw that in here in the 2017 run. And one of the things I think is interesting about this market cycle we're in right now is, A, it's interesting that we never really got back to those same levels as before. And B, the thing I think is most interesting and what I really want to highlight here is this kind of weird behavior we're seeing where price has been going up for Bitcoin ever since, you know, the summer, the correction we saw in the summer. But reserve risk has been flat and in fact actually falling, even though on a macro scale, we're still in an uptrend, right? You know, with the price, we had a higher low relative to the low that we saw in the summer before, you know, this recent move to the upside that we just saw back into the 40K range. And you can see that actually if you zoom in here, we're actually down in the green zone on reserve risk. We're actually falling on reserve risk while price is still in this macro uptrend. And I think this is remarkable because it's never happened before in Bitcoin's history. Every single other time we've hit this green zone in Bitcoin's history, price has been in a definite downtrend. You know, it's every single time, definite bear market, every single time. Price is not in a macro uptrend at any of these points, whereas price has been in a macro uptrend here, but yet we're still entering the green zone. And I think this is kind of remarkable because it suggests that long-term holder sentiment seems quite good from this indicator's perspective. Long-term holders' outlook is bullish. They're pretty confident that Bitcoin's price is going to appreciate from here. This is not a good time to be exiting the market. And I think this is notable because, you know, one interpretation of this indicator is that, oh, well, this is really bearish, right? You could say, oh, it's bearish because every single time we've entered the green zone, we've had more downside to come before moving back up. And that's true, but again, that was during a downtrend in price. That was essentially one way you can interpret that as just long-term holders saying, okay, I don't know exactly when price is going to reverse. I'm just going to start accumulating here because I think it's going to go up in the future. I'm not going to worry too much about the short-term losses I'm going to take. But what they're doing in this uptrend is they're saying, oh, price is going up, but I still think it's going to go up so much higher that it's worth me to just hold on. I don't want to distribute yet. Potentially, that's what this indicator is suggesting might be what long-term holders are doing, is that even in this macro uptrend, they're still becoming increasingly bullish on Bitcoin's price in the future. And then maybe especially with this recent correction, they just got even more bullish that it's going to be able to go up. Or at the very least, they don't think that this is a good time for them to be selling. They're waiting for higher prices, potentially. Now, again, that's reading into things a little bit. You know, this is just one indicator. But I did just want to point this out because I haven't seen other people talking about this. And I do just think that this behavior on this indicator is remarkable given the way that price has been going. This kind of weird divergence of long-term holder sentiment increasing while we're in an uptrend in price, I think is just something that's notable. And from that perspective, then it wouldn't really be totally shocking to me if we could see a rally out of that. Because, again, if long-term holders are getting that bullish, then that's selling pressure that's not going to be entering the market. You know, there's a lot of selling pressure from long-term holders at these points because they're exiting the market. Unlikely that they're going to be contributing to the sell-side pressure, which just makes upside more realistic. So again, not guaranteed by any means. You know, obviously none of this is financial advice. Make your own decisions. But certainly this is a good sign, in my opinion, to be setting the stage potentially for a nice rally. Because when you look at these green zones in the past, they have set the stage for nice rallies when you eventually come out of that green zone. So just something to pay attention to. So to wrap up, I just want to move over to the Bitcoin price and just talk a little bit more about the price action we're seeing. So here what I have marked on these white lines is just this kind of general range that we had been in the summer. And it had looked like we were just going to be stuck in here potentially for a while. But with this move to the upside, this over 11% move back to the upside, we've actually broken out of that range again. Now, who knows? It's yet to be seen if we can hold it, right? Just because we've broken above 40K doesn't mean we can turn that immediately into support. We very, very easily could just slice back through into this range. But certainly it's a lot better to be above it than below it. And so I think that is hopeful from that perspective. And and we're just going to have to wait and see what happens. Again, I think it's too early to be just celebrating and just saying that we're clear skies ahead at this point, but I do think this is obviously a good first step. Another thing that a number of people have been calling out that is just, I think, useful to note, if we look at the relative strength index down here, one of the things that we can see is that this downtrend we had been in, which essentially just suggested that momentum was just bearish. You know, every single time we tried to move back to the upside, we just got rejected. Just kind of this bearish momentum all the way to the downside, similar to what we've been seeing on the momentum bias indicator. We've now just broken out of that macro downtrend. Kind of, no matter how you draw this line, these descending lines are always a little bit questionable because it's always very subjective how you draw them. But no matter how you draw this line, we've broken out definitively to the upside in relative strength, and so that might suggest like the momentum bias indicator was suggesting, some new momentum entering the market to the upside. Now, how sustainable that'll be, who knows? But certainly when we've been in these really oversold zones before, it's offered at least some relief, and in this case, very much relief to the upside. And we were coming off of a very oversold from the RSI's perspective zone here. It'll be interesting to watch how this goes, if we can move back up to these higher ranges of the RSI in the future. Just something to keep an eye on potentially. So one thing I did just want to note or talk about in terms of price action, some things that I'm going to be watching as we go from here, is if we can turn 40K into support. Again, too early to know if that's likely or not. We're just going to have to wait and see. But if we can turn 40K into support, then we want to start looking at these other ranges of general potential resistance we might encounter. So I think another kind of obvious one is as we get up into this general region up here. So again, we'd have to kind of turn this general area into support. If we can do that, then the next area might be kind of in the 46 to 48K general kind of region, or up all the way to 50K potentially. And then past that would be more up into this higher range here. Maybe the range that we've been hoping to turn into support all the way back here late November, the kind of the mid to low 50K range. And those are going to be kind of the targets to look at. And one of the things that I am thinking about during this, now again, this is just my perspective, so take it with a grain of salt, but one thing that I'm thinking about is that for me, this rally will become a lot more convincing if we see bullish sentiment returning to the broader markets, right? My thesis with this whole correction has been that the broader macro bearish conditions in the stock market and other markets has been also just dragging down crypto right along with it. And so for me personally, to be more confident that Bitcoin can just slice through these levels of resistance where, there could be selling pressure of people who had bought in, or their cost basis is around these points, who might just want to get out once price would reclaim those levels, to be more confident that we'd have enough demand to push past it, or that people would elect not to sell at those points, would be if we do see a return of more bullish sentiment in the broader markets. So here I'm showing you the S&P 500. We had a very kind of a pretty sizable correction, coming into the last, in the month of January. It was pretty bloody January from a historical perspective. So one thing I'm going to be looking at is, can this uptrend continue? Can we actually start to reclaim a more bullish sentiment in the market? And if we look at some key moving averages, there's some reason to be hopeful, but of course I think it's too early to be confident by any means, or to be too certain. So we've reclaimed the 200-day moving average with the S&P 500. We actually had rallied all the way up above the 100-day, but then we've moved back, held actually the 200-day as support here more or less today. So something I'm going to be watching in the coming weeks is, can we, flip these key moving averages into support and then potentially be able to start moving back to the upside. And if that bullish sentiment really returns, then I will be a lot more believing that Bitcoin, if it continues to rally, it'll be able to continue to slice through resistance. Because if we see a more risk-on general attitude in broader markets, that might be a reason to be optimistic. People might be willing to take more risks in the crypto markets, which might lead more people to kind of FOMO in, dump money back into Bitcoin to let that really appreciate. Another one to look at is the NASDAQ, being the more tech-heavy index. This is still trading largely below the 200-day. I'd like to see that reclaim the 200-day going forward, especially because Bitcoin has been quite heavily correlated with the NASDAQ, but we'll just have to wait and see on that. So that's my general outlook. I think that we're certainly, from a lot of indicators perspective, be it the momentum bias indicator, be it the UDPI perspective, or some of these other perspectives with, derivatives, there being a lot of short positions in the market right now. a quite fearful market right now, and then also long-term holders not looking for the exits, it doesn't seem right now. I think this could be a plausible place for a move to the upside. Now, that doesn't mean we're just immediately going to go reclaim all-time highs, right? I think it's probably more realistic to expect some battles to have to take place in the meantime, and probably some corrections of higher lows having to be reestablished before we could ultimately maybe put that in, if this becomes a sustained rally. But I think it would be totally plausible from some of those indicators' perspective for this to have been the bottom. I think it's plausible. But again, I think it's too early to be overly optimistic about that, right? This very well could end up just being a blip that just dumps back down. Could end up being a relief rally that peters out at maybe this kind of resistance range, or maybe even a little bit higher at this resistance range before going into a more protracted bear phase. We're just going to have to wait and see. Again, I think so much is in the hands of the broader market that it's really going to depend on things like what the Fed does, what the stock market does, etc., of what can happen. But all else being equal, if there isn't kind of outside forces pushing against Bitcoin, I think it's from a purely kind of internal to crypto perspective, I think this is a very reasonable place for us to have seen a bottom. So again, I'm not going to make any solid predictions here. I'm not getting overly confident or betting the farm or anything like that by any means right now. But that's just my perspective. I'm credulous as long as we don't see really bearish overtones coming on. And we're just going to have to wait and see. And certainly as we were able to slice through some more resistance, as we potentially could move up, then I just think that would just confirm more and more that this might be a rally to believe in. All right, so not financial advice, from your own opinions. That's just my perspective. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.